Good afternoon, everyone. Thank you so much for joining today's webinar. My name is Marcos, the portfolio manager here at Stock Specialist. And look, we've had quite a lot of inquiries around today's topic. And so we thought we'd stray a little bit from the norm and talk about the top uranium stocks for 2023. It's relatively quite the underdog sector, but it's something that poses quite a lot of interest for a lot of our investors and a lot of clients. So we'll run you through quite a few of our couple of stocks and how our performances have been going as well. But first of all, just a bit of housekeeping in general. Hope everyone's doing well. As a general disclaimer here, all of our advice, our financial advice here, it's just general advice only. If you do require any personal financial advice, please do consider your personal financial planner or broker. So taking a look at the agenda for today, as always, I'll start off with a little bit of a rundown of how the market is tracking, especially our macroeconomic events. Of course, that is what will be functioning our strategy, and the vast majority of other investment banks and a lot of other research houses' investment strategies going forward. So it's definitely important to keep abreast of that. And of course, why uranium is the next big thing, possibly, there is a question mark, and a few of our top stock picks, and how we're going with our performances as well. So on the macro context, you know, as always and as expected, aside from today, the ASX 200 is a little bit down today, but overall, you can see that on a monthly basis, the ASX 200 there on the top right-hand chart is up about 5% for the month. The US S&P 500 and the US NASDAQ are also up, but whether that is actually able to be maintained, specifically with the NASDAQ, we've seen a little bit of a dead cat bounce when it comes to technology stocks, information technology stocks that have been battered down quite heavily for the last 12 months. So we are keeping quite a close eye on those. You can see the Shanghai, the Nikkei, the Japanese index, and of course the European indexes with the FTSE and the DAX as well, sort of stagnating a little bit. But we'll get into that, of course, in any other particular time that we would like. But I wanted to focus on the most recent macroeconomic event of the year, which we'll see on the next slide. Yeah. So the Reserve Bank of Australia, actually on my birthday, which was the 7th of February, the Reserve Bank, as pretty much was expected by a lot of futures markets, increased the cash rate by 25 basis points. We're currently sitting about 3.35% for the cash rate off the February meeting. And I did want to touch on this. I did quite a bit of a workup. A lot of articles with regards to our members discussing how we would anticipate these interest rate hikes going forward. And for the vast majority of investors and of course, you know, even homeowners alike, specifically for the domestic Australian market, which I do believe I mentioned on last week's webinar, the Reserve Bank is expected for the March meeting at least to also increase. There's about a 91% probability that they will increase by about 25 basis points again, hitting that 3.6% terminal rate. And basically from there, we will determine once the quarterly retail sales, inflationary data, and of course the housing market data is released, that will be basically dependent on where the Reserve Bank, you know, will dictate their monetary policy going forward. So a lot of indicators coming there, but we can see, which has been the primary instigator, I guess the primary catalyst, I should say, for the ASX 200. You can see there, just at the start of 2023, massive sort of boost on the ASX 200 after that China reopening, sort of eliminating that COVID zero policy, which is something that we're looking at quite closely. There are some slight concerns, a lot of ruminations going on, whether the reopening of China is actually as strong-holded as they say. So we will be taking quite a close eye on that, whether there may be a little bit of a downturn in the short term. But overall, our main point of inflection still maintains. But of course, I think the main thing why everyone here, a lot of our clients are looking at, is uranium. Is it the next big thing, or is it just the underdog sector that's always been sort of undervalued, underappreciated, and is the political landscape too much to handle? A lot of questions coming through from a lot of investors. So uranium, is it the next big thing? Okay, so for those who don't know too much about uranium, uranium is obviously a element. Uranium 238 is a high value, high energy producing element. So 1 ton of uranium actually produces 40 million kilowatt hours, right? Doesn't really mean too much for a lot of our engineers, electrical engineers out there, but it's essentially 1 ton of uranium is equivalent to about 16,000 tons of coal production or 80,000 barrels of oil. It's the same sort of equivalent factor that they can do there. And uranium is currently being supported closely, not necessarily by the Australian government as of yet, but we are seeing, particularly in Western Europe and Eastern Asia, economies such as Japan. Japan was previously reliant on Russia for 75% of their electrical requirements were received via liquefied natural gas from Russia, and that has been, sent into a bit of disarray since the February Ukraine invasion, and now they're looking to reinstill a lot of these uranium and nuclear power plants coming through. So uranium is something definitely to take a look at. And demand, of course, as I've said, is ramping up, particularly for its ability to be a low carbon intensive form of energy generation. It actually generates about less than 1/10 of the carbon emissions than any other form of electrical generation. So why are we so, I guess, stagnated towards it? Why do we not like it? And well, why does the overall economy have some jitters towards it? And this graph that you can see here on the left hand side is something that I did really want to focus on. So you can see here the uranium price is currently trading about the $50.65 per US dollars per pound. So uranium isn't priced like other primary commodities such as iron ore or lithium or gold or anything like that. They're priced in their own metric, and the reason for that is because uranium is such a quite rare element to actually achieve and actually utilize and refine. So they're priced per pound, $50.65. So you'll see here on the supply side, specifically after the Ukraine the Ukraine and Russia conflict, the uranium futures jumped past $50 per pound in February, and that's signs of quite bullish demand. And on the demand side, the US Department of Energy has actually purchased 300,000 pounds of uranium, which is kicking off its solicitation to buy 1 million pounds. So they're essentially pushing forward their I guess less reliance on other economies, particularly not just Australia, but Eastern Asia, Kazakhstan, etc. And the Japanese economy, which you can see on this left-hand chart, you'll notice on particularly the price indicators for a lot of the stocks that we are recommending, and the vast majority of uranium stocks in general do see quite a strong bounce during that half one 2021, and I'll tell you the reason for that in a little bit. But within its category, you can actually see. I thought this was something quite interesting to show. And I thought a lot of clients would actually really appreciate this. And this is some of the of course it's just an example of the data that we provide and the forecast that we provide in terms of comparing various different commodities. So you're taking a look at things like crude oil, Brent, LNG, natural gas, heating oil, ethanol, etc. Uranium is actually the best performing commodity within its category, doing about 15% year on year. And uranium has quite a distinct asset base. It's quite saturated, and the best part about it, because it's not necessarily the most well-known commodity on the ASX, it has quite a little bit of arbitrage opportunity to be able to take a look at different assets and different stocks that have exposure to the asset, and take advantage of that upswing or downswing in the commodity price. So yeah, and just following on, I've mentioned this a couple of times, but everyone who comes on board basically tells us how grateful and thankful they are for taking the opportunity for this. So again, just for our webinar viewers here, we've got our gold package, which provides us exposure to the income growth and our ETF portfolios. Of course, you get an account manager on speed dial there as well. Usually retails for about $1,500 per annum. We've cut that about 33% to about $997 per annum. But our best value deal is usually and always has been the 3-year diamond membership. And it's not only just with regards to getting that account manager on speed dial. You'll also get access to our technical analysis software tools. We provide access to our ETF growth and income, but you also provide access to our mining portfolio, which is our best performing portfolio for the year, and actually for the last 18 to 24 months as well. And on top of that, you do also receive portfolio reviews with either myself or one of my other portfolio manager colleagues or my wealth management advisors. So here, we're back to the main priority of the evening, which will be our top uranium stocks and our top uranium picks for the year. Okay, so what are they? Great question. So our first one, and probably the highest conviction buy that we have at the moment, the recommendation that we've been providing coverage on, is Paladin Energy. The ASX code there is PDN. They are an independent uranium company, and they are expected to progress to commercial production within 2024, and that's H1 2024. And that's actually, in terms of the uranium market that is currently there on the ASX, they are actually the closest to production than any other uranium stock on the ASX. And the reason for that is for a couple of things. They have a large-scale uranium production capability. They also have massive possibility for market share as well, but they actually, dissimilarly to a lot of other uranium companies, Paladin Energy has actually produced in the past. They've produced, and they have a currently functional mine there in Namibia, which I'll talk a little bit about on the next slide. But they actually were a production capacity company during the periods of about 2007 to about 2011. And for anyone who knows a little bit about uranium and what happened in 2011, will probably expect as to why, what happened there. But if you take a look at this next slide, they're well established, and when I say well established, that does seem to be quite a bit of a buzzword these days. We've seen that specifically with a lot of other African miners. They say they're well established. They have a tier 1 jurisdiction, particularly in Africa. But that's not necessarily the case here. So with regards to Paladin Energy, they're well positioned in the province, in the Langa Henrik mine in Husab Rossing in Namibia. Now you can see there on the map there. But for a fact that a lot of investors probably won't know, Namibia actually produced 11% of uranium, of the global supply of uranium worldwide, globally, last year, and that was actually ranked as the second last economy producer. The first, which possibly another, well, the vast majority of investors won't know, the first and largest producer of uranium globally is Kazakhstan. Kazakhstan produces quite a lot of the uranium there, but those are pretty much all off taken, and it's not really a feasible, it's not like they have a functioning exchange to actually produce and sell shares on that exchange. So, and they have excellent local infrastructure and also low cost labor costs, which we've seen particularly in different commodity sectors particularly in Western Australia, the labour cost and the cost of skilled labour has actually tripled in value over the last sort of 12 to 18 months. And overall, they have strong government support and is overall a safe jurisdiction for the economy. So you can see here the Langer, I always used to say larger Heinrich mine, but it's the Langer Heinrich mine. Paladin Energy in particular did a capital raising, I believe about 9 to 12 months ago, was heavily oversubscribed. And they are currently fully funded until production, which, as I mentioned, will be 2024 half one, as in Q2 half one next year. So pretty much 12 months away from production, which is, you know, the closest timeline that you can get to any uranium explorer at the moment. But a great capital forecast, and you can see the capital intensity going there. Uranium is priced, obviously, as a lot of other commodities are priced based on the grade. You can see that over the course of the stockpile has actually decreased, but the mining phase has actually increased there over the crushed tons as the forecast increases. So overall, our overall expectation for the Langer Heinrich mine, as I've mentioned, the project is approved. No mining license jurisdictions, no concerns over that. They are fully funded and have a long lead items currently on delivery, and fully funded to that. And they have offtake secured. I believe currently they have about 50% of their current production capacity already off-taken by a North American energy company as well. And they have a global marketing team, of course, focusing on securing the rest of that offtake. They currently have about $163 million US in net cash, no debt as well, which is fantastic, particularly now that we're in a rising interest rate environment. The capacity for a lot of companies to be able to facilitate that debt is a major concern. So Paladin not having any debt, fantastic. And a sustainable future. I think that's probably, the main concern for a lot of people. A lot of people have raised concerns. Yes, of course, iron ore is great. We need it for the economy. Coal's great for energy. We need it for this. But the ability to reach a net zero climate efficient future will have the capacity to be achieved by uranium and nuclear energy. So they're committed to developing that sustainably. And you can see here on the next slide, which is pretty great, and this is what I wanted to push on, and you'll see it in a couple of other graphs as well. But you can see there by about mid 2021, the price jumped from about 37.5 cents up to about 87, then dropped down a little bit. And the reason for that, if you remember from the previous few slides, the cost of production for a lot of uranium mines and a lot of uranium companies is sitting around that 25 to 30 US per pound. Okay, so a lot of companies, a lot of miners who are not able to achieve that low cost, particularly companies that are outside of Paladin. Paladin is actually one of the main reasons why it's such a great one there. Having the mine situated in Namibia, the labor cost and all the sustaining costs that you may see in gold are actually the lowest out of all uranium miners globally. They're currently sitting on a cost of about 20-25 US per pound. So as soon as that price uplifted there in half one 2021, a lot of these stocks really pushed upwards, but some did better than others. And that's why we're focusing on only a select few. All right, so the next one is Alligator Energy, AGE. It's a great one. It is still in that exploratory phase. As I've mentioned, Paladin is the one that we're recommending because it is closest to production. But Alligator still has a lot of, they are led by quite an experienced uranium team, people that have worked in various jurisdictions, and they have three key projects that I want to touch on. So you can see on the next slide, They have a project there in Piedmont, and they have a Samphire project in South Australia and the Big Lake Copper Basin as well. But their primary one is Northern Territory Alligator Rivers, which has given them a lot of high-grade uranium results, hence Alligator Energy. There we go. Shockingly enough. So the Samphire project is one that we wanted to take a look at quite closely. It's in South Australia. I shouldn't say South Australian jurisdiction. We're still Australia. But looking at this timeline here, hopefully the resource update was conducted in Q3 2022, and the scoping study was completed on Q4 2022. Regulatory approvals is, of course, something that may be a little bit time consuming, as with a lot of jurisdictions, but particularly in Australia, and particularly with uranium mining, it is something that may take a little bit longer. The reason that we've seen this, and the reason that we say this, is basically the only functioning uranium mine that is operated in Australia currently, the one that's actually only profitable, is owned by BHP, which is the Olympic Dam project, which also produces quite a lot of bit of copper. Uranium is basically just a side product of their process there. So you can see on the next one as well, very similar price activity on the charts. It's literally almost the exact same, about that H1 2021. And a lot of investors are saying, hey, this is quite viable. But you can see comparatively to Paladin's price activity, there wasn't a lot of support on that after that initial uplift in the share price. So you can see the trend line is overall since 2021 is still overall arching upwards, still quite a bullish trend line. However, the support levels are not necessarily as high as they were, for example, with Paladin. And of course, the reason for that is primarily those timelines and where they're actually looking forward to. So the last one I wanted to take a look at is Boss Energy. You can see that quite an awesome price charts there as well. But again, very similar to Alligator Energy. However, they have a fully permitted uranium mine. They have $170 million worth of established infrastructure in South Australia, which includes primarily rail lines and ports. And they are the closest Australian-based uranium mine, which will be producing, hopefully, based on their definitive feasibility study, which is the DFS, approximately about 3.3 million pounds per annum of production capacity. So significant upside potential. You can see there, very similar to what you will see with a gold explorer or a gold developer. You can see the measured, indicated, and inferred. For all those who do not know, the measured is essentially the lowest probability that it actually exists. Other way around. I do apologize for that. Measured is the highest probability that the grades and the contained uranium asset is there. Inferred is, of course, based on initial drilling assays based off reverse circulatory drilling. And total overall, they have about 52.4 million tons per annum, with the grade currently sitting about 620 parts per million, which is pretty much on par with the likes of Paladin, which is sitting around that 600, which is great. And overall, it's 71.6 million pounds of contained uranium oxide, trioxide, I should say. It's U3O8. I didn't do chemistry in school, but I do know what that means. But basically, that's worth a lot of money. So there's significant upside potential there. And their primary project is called the Honeymoon Project, which is quite nice. You can see that on the next slide here. Yeah, so the Honeymoon Project is actually, as I said, in South Australia, and it's one of the similarly lower costs. It's not as low cost as Paladin Energy, as I mentioned before. Based on their DFS report, the all-in sustaining costs for the Honeymoon project is currently sitting about 25.6 US per pound, okay, and an EBITDA margin of 62%, which is really, really good, and a low capital cost of 80 million. However, keep in mind that DFS was done approximately about 6 to 12 months ago, and of course, as we all know, being investors, inflation has affected not just our own grocery bills, but it has affected miners as well. So costs that were anticipated 12 months ago may not be the same as they are now. But yes, look, still pretty great key study outcomes, as you can see there. They have a life of mine of 11 years, and that uranium production and an NPV of approximately pre-tax, based on a 60-pound price, about 412 million, which is quite great for a small cap company. So essentially apply that to a PE ratio of about 8 to 1, 5 to 1, which is, you know, very conservative based on current miners. You're looking at a sort of 5 to 6 billion market capitalization there. Of course, that's all based on general general assessment, but you can see, you know, the outcomes and the catalysts that we're looking for are these ones in particular. So the first one, which a lot of clients have been focusing on, and a lot of investors should be focusing on quite fervently, is completing the FEED study, the front-end engineering design. That has been in line with their feasibility study expectations, which is great. They have secured long lead time items. Long lead time items being, you know, things like ball mills, a lot of large infrastructure that is required, you know, requires long lead times, i.e. 6 months or 12 months of production there. They're looking to restart development there. Well-capitalized balance sheet, resilient balance sheet, and production is expected currently in about the next 18 to 24 months. But as I said, that's particularly with Boss Energy, is the only Australian based uranium mine that has the closest time horizon to production. So it's definitely one to keep on the watch list. Have a look at that one. And of course, if you have any questions, feel free to give us a bell, because it's something that we're really excited about. And you can see here, it hasn't really appreciated as much as some of the other uranium stocks that we've talked about today. But you can see it's done only about 8.4 since that 2021 valuation increase. However, the strong trend line, and we see this primarily, I'm sure, for a lot of our long-term investors who have invested in, say, for example, iron ore companies, coal companies, gold companies, particularly when they have a tier 1 jurisdiction such as Australia, there is a strong long-term level of support there in the price action, which you can see there. There hasn't really been any sort of massive low downturn price action in this stock. So great one to keep on the watch list, as I said. And look, I'll show you guys. I was really quite happy with a lot of our portfolios for our paying members. You know, just in particular this year, for the start of the month, our income portfolio, which has about 25 different stocks in there. And again, this is just a gross return. It doesn't take into account the fact that a couple of them, well, quite a few are on holds and a couple of on reducers. Based on our data currently, we've already achieved a 6% year-to-date capital growth for our income portfolio, and that's not including the high dividend yields that are expected to be occurring in the next month. Interim dividends are usually paid about March, April, so we're expecting that to do quite well. And if you change to the next one here, you can see our growth portfolio, and there have been quite a few good ones. We've picked the right industries. You can see there we've left the industries there on the right hand column. If you want to take a look at those, we're not necessarily overly invested in negative inelastic demand stocks. We do have a couple of IT stocks that have performed quite well. And we have a lot of consumer staples, a lot of industrials, things that will actually been achieved, quite a lot of capital growth for our members, and that's done 10% year to date already so far. And our mining one, as we've said, I liked, we cover pretty much, I think, for the vast majority of mining stocks on the ASX and of course internationally as well. But the ones that we provide research coverage of have already returned over 36% since its inception last year for our members as well. So, this is the primary focus for why we want to let our our webinar viewers actually take a chance on this. Our returns are not insignificant, especially in a volatile time and in a volatile market, where basically the primary question that we get is, where exactly do we invest and how? So taking advantage of those diamond memberships there, if you have your financial planner or anything like that, it is quite an exorbitant fee to essentially have a documentation produced for you, which doesn't really provide you anything substantial. But the diamond membership there can actually provide you with our portfolios, with target prices, and with time horizons applied to them as well. You've got technical analysis software tools, because if there's something that we primarily don't provide coverage on, you can perform your own analysis as well. And we also have, of course, a dedicated account manager and those reviews as well, with either myself or any of my other portfolio manager colleagues. So look, relatively quick one today, only about 30 odd minutes. I could have spent probably another half an hour talking about uranium and probably bore you all, but that's not my job. My job is to help you out all as much as I can. And so for anyone who's interested, of course, feel free to send us an email at admin, ADMIN, at stockspecialist.com.au, or call us on our main line, which is there on our stockspecialist.com.au website, or feel free, if you're feeling very anxious and feeling very excited about a couple of questions that you may have, you can feel free to give me a call as well on 0459 934 889. And our team of highly qualified financial advisors and brokers are more than happy to help you out with anything that you may need. But again, for all our webinar viewers, thank you very much for attending, and I hope you enjoy the rest of your afternoon. Thank you so much.